So, hello guys, welcome back to new video. In this video, we will see how we can analyze charts by just observing and how to improve trading. In front of us, we have this chart. Looking at it, what do you think? Can the price go up or down? First, we'll look at simple examples. Then we'll move on to advanced setups. Whenever you pick a chart, the first thing you should ask is a trend being formed or is there a story? Do you see any pattern or any level? Firstly, here we can see a strong downward move. After that, the market consolidates. But the downtrend phase is much stronger than the uptrend phase. How do we know this? Simply by looking at the candles. During the downtrend, the market moved down in a short time with large candles. On the other hand, during the uptrend, the market moves up slowly with small candles. Next, look here. We have a level that we call a flip zone because this level was acting as support earlier, and after the breakdown, it started acting as resistance. So here we can say that the market may not break this level and could face resistance. Next, we wait a bit. Here we get a breakout. After facing resistance, the market gives a breakout. From the resistance, we see selling pressure. Then some sideways neutral candles form, and after that, we see a strong breakdown. So at this point, it is clearly visible that the market can move down from here. Overall, the market is in a downtrend, so we are trading with the trend. If we enter a trade here, then according to the structure, our target would be down here. We hope this simple example is clear to you. Now let's look at the next example. What can happen here? Will the market go up or down? First of all, the market is clearly in an uptrend, and currently the market is moving sideways. So here we can draw some trend lines like this. The pattern that appears looks like a kind of flag pattern. So we can take a trade on the trend line breakout, or we can wait for the previous high to break. We would recommend waiting for the high to break. Next, the market breaks the trend line and the high, and then continues its trend. In this portion, we get a good move. Then we see selling pressure, but notice that the selling here is not very strong. Let's move on to the next chart. Now what can happen here? The market makes a higher move. What's interesting here is that the market makes a higher high, but at the same point, it breaks the previous low. Also, if you look at this downward move, you'll notice that there is very strong selling. You'll know that we generally do not take trades here because the price gives a straight move, continuous green candles, from this point to this point with a breakout. People who bought here would book profit based on structure, or if a negative candle forms, they would book profit there. In such a scenario, if the price closes back below this level, the market can move down from here. Look at this selling. It is very strong. Previously, we did not see such strong selling. That's why this down move is very important. Moving forward, we see that the market strongly breaks this level and comes down. That means we had a fake out, and as a result, we see a fall in the market. The price then falls to this demand zone. If strong selling candles form during a consolidation phase, we must consider them in context. Let's look at the next example. What can happen here? Will the market go up or down? Firstly, we will mark support and resistance levels, which is very easy. Here we have a supply level that has become resistance. Next, we have a resistance level that has turned into support. And below, we also have a support level. Now look, the market keeps approaching resistance again and again, and at the same time, it forms higher lows. We call this a builder pattern, like an ascending triangle. The price goes up, comes down, and spends time near resistance. Look at this chart and analyze what can happen next. It's very confusing. Here is a key point for you that you should always remember. If you don't understand the market movement, if very large wicks are forming, if the market structure is unclear, then what should you do? Simply this. If you don't understand the chart, don't force a trade. No one has put a gun to your head forcing you to trade. If the chart doesn't make sense, don't trade. When you understand the chart, when you can clearly see the trend, levels, and patterns, only then take a trade. It's not necessary to take every single trade. That's all for today. Hopefully, you have learned from this video. If you found the video informative, and make sure to join our free Telegram channel where we share our trades live. Thanks for watching. See you in the next video. Until then, bye.